Hello there and happy Independence Day to Nigerians, well, all across the world, even outside the country. And welcome to Business Nigeria, a special edition that will focus on key decisions across the economy under the current administration, issues surrounding the business world. We will try to touch all of it in today's episode. I am Tolulokpe Ogujobi. Welcome. Glad to have you join us again. Well, let's look at some stories. Monarch Airlines in the UK has collapsed, becoming the biggest ever British airline to cost the reputation of tens of thousands of travelers. Administrators for the airlines, KPMG, said Monarch was forced to cease trading as a result of continuing losses. Monarch cancelled about 300,000 future bookings and apologized to customers and staffs as it became the UK's largest carrier to go into administration. The British government has asked the Civil Aviation Authority to charter about 30 aircraft to bring back to the UK about 110,000 Monarch customers in overseas. Well, the Nigerian Railway Corporation has hinted at plans to construct 10 new rail lines across the country to ease transport difficulties. The rail lines will be covering a traveling distance of over 3,000 kilometers. A report on the nation's rail development released by the Nigerian Railway Corporation says the planned rail lines will cut across cities such as Lagos, Oyo, Osun, Osogbo, Abuja, Benin, Kogi, Sokoto, and Onitsha. The corporation, however, complained of poor funding of its various rail projects by the government. Now, more than 2 years ago, President Muhammadu Buhari became the first challenger to unseat an incumbent president in Nigeria's history and was sworn in amidst great hope and enormous goodwill. Following his inauguration, the country was awash with optimism that his government would reignite a fading economy, perhaps replicating the relatively successful Lagos APC model. More pertinently, President Buhari would lay the foundation for a long overdue implementation of fiscal federalism and further diversify the national economy, as promised in the APC manifesto. The midpoint of President Muhammadu Buhari's tenure presents an opportunity to access his performance. How has Nigerian economy fared 57 years after independence and 2 years into the APC's government? Well, joining me in the studio to talk on these key issues is the Chief Executive Officer of Cowry Assets Limited, Johnson Chukwu. Thank you very much for joining us.
My pleasure. Happy Independence Anniversary.
Happy Independence Anniversary to you too. Well, let's start. We always start from this point. Nigeria used to be the granite pyramids, all of this, before we now moved into the mono economy. That's when the oil boom actually came. Now, tell us a little bit about some of this, what actually happened, this dependence on oil that made us find ourselves where we are.
Well, I think it has to do with the nature of human beings, humanity. Initially, this country's economic foundation was based on productive activities. At that point, when we had the three regions, the northern region, the eastern region and the southern region, or the western region, we had competitive productive activities. So you had a western region that was driven by cocoa production, the north by granite, and the south, the east by palm oil. And the good thing about it was that at that point, there was no issue of distribution of national cake. It was about producing enough so as to even pay excess to the federal government. So in effect, the structure of that economic model was such that the regions were productive regions. And unfortunately, when we found oil, two things happened, not just when we found oil. Okay. The first thing was the military coup, and that unitized the political system. So because the military system, the military hierarchy is a hierarchical system, and then you have a situation where the military has to govern by command and control. So what happened was the federal structure, though we continued to answer a federation, but it became a unitary government that we had. And following that was the oil boom. And having a unitary system of government, the central government, in effect, took over control of all the natural resources. And that led to a situation where we had an economic system that was modeled such that whatever was produced anywhere was elicited by the federal government. And the federal government became a distribution point to give to the states. And that was when the collapse of productive economic activities. That was what led to a shift from two things, like I said, happened. You have now have a unitary system of government, and then you had an oil boom. An oil boom that was such that did not require a lot of input to generate a lot of resources. And those resources were not only generated at the point where they were created, but they were collected by the federal government and distributed. So what followed next was we had a creation of more states, a creation of distribution centers based on political interests. We moved from 4 regions, 3 regions, to, of course, the 4th region was created by the civilian government, that's the Midwestern region. And then we moved to 12 states, 19 states, 21 states, 27 states, and now we're at 36 states. All the states and local governments, we have 774 local governments. All of them were created not as centers of productive activities, but as units of distribution. So we now created a system of an economic system that discouraged productive activities. So the incentive system was not right for economic progress.
That was why we now found ourselves in, because along the line, moving ahead, we still depended solely on this oil price. And because of time, I'd like us to move close to now the 2015, 2014, when we now had the crash. I know before that time, there was also a crash. We were able to recover and went on recession and all of that. But the issues came all together. The drop in oil price, revenues claimed, state governments were not able to pay salaries and all of that. Now this administration now came in and there were lots and lots on their hand. Now, how would you assess what's been done? We've seen lots of moves, TSA, even the growth recovery plan, which we are working on now. What's your assessment of what's been done? There were lots of misplaced priorities, there were lots of issues too, but...
Well, I'll give you an example. I was reading in the past during these public holidays, and Chief Clark made a very profound statement, and I don't know whether anybody took notice of that. He said the system of government, we have the structure of the Nigerian economy, the Nigerian political system, would not create room for an effective leadership, That even if you put somebody who is very competent to govern the current political economic structure, that you're not going to have effective leadership. And for me, it was a very profound statement, because I have always looked at why are we not moving forward. Like I mentioned earlier, we have 36 distribution centers. We have 774 sub-distribution centers. And then you have a situation where the political model does not encourage states or the federating units, as we claim they are, to produce economic resources. Rather, we have a system that encourages them to go to the federation at the end of every month, Federation Account Allocation Committee, and collect funds for distribution. Yes. And for that reason, the state governments are not investing in those things that will catalyze economic growth. We're not, in other countries in the world, let me tell you, Tolu, in other countries in the world, if I go to Okokomaiko to go and set up a manufacturing outfit, the state government will build road to bring it to my factory. In fact, the state government will go and beg me to come and set up. And I say, this is where I want to set up. They say, this is where you have land, or this is where you have the supporting infrastructure, or whatever, maybe the raw material, the feedstock for what I need for my product activities. They will build road for me. Sometimes they will extend the rail lines so as to evacuate my produce. Cast your mind back to when the Europeans came to this country. What was the driving force for the establishment of a rail line from Port Harcourt to Enugu? Simple reason, coal was discovered in Enugu. And they need to evacuate that coal to Port Harcourt. And they built a rail line from Port Harcourt to Enugu, which was eventually extended to Maiduguri. The granite pyramids that were in Kano, that was what drove rail line from Lagos to Kano. What have we done subsequent to that? Nothing.
That's it. After all of that, so everybody just went down.
Bringing it back to the issue of what has happened in the past 2 years. The president in his national address said he has distributed, the current government had distributed 1.46 trillion or thereabouts to the state governments. Call it excess crude, call it intervention fund, call it funds to support, budget support and whatever you call it. 1.4 trillion. I ask, can you point to any physical infrastructure that was developed in any of the 36 states from that allocation. Do you know what 1.6 trillion is? That has been frittered away in consumption. And you still have about 23 to 24 states that are owing salaries. It's not enough for them to pay off the arrears of salaries. Because we have created an economic or political model that is very wasteful. That no matter how much we generate, we're going to end up consuming it. And that's where the problem is. So the problem is beyond the president, because we have a political structure that is not a productive and effective productive structure. That is not to say that the president has not made some mistakes. For instance, the first 6 months was wasted without appointing ministers. And then we had no economic plan. The economic plan was just announced after 2 years of government. And we also have to recognize the president has not been very strong. So that may have also contributed to the lethargy we have seen in government. So we must we must cut him some space for that fact that it's not his making.
But in real terms, the business sector, talking about private sector partnership, talking about meeting and all of that, has been handled too by the Vice President now, yes, Professor Yemi Osinbajo, and lots of developments. We had the executive orders. We had lots and the forex issue, which we cannot ignore. At least to a level, there's been kind of some stability. We've been hovering between 360 and all of that. And I think even at the bank rate is even kind of stable too, and people can access this forex. I don't know what you make of. I'm looking at some of these policies directly now. What do you make of some of the achievements we've made? Okay,
let's look at the economic policy of the government, the executive from the executive arm. You have the vice president, when he was acting president, he came up with some executive orders to improve the ease of doing business, including the issue of visa on arrival, the tax allowance or tax holidays that we are granted to those for allow people to declare their income and assets. And then on the monetary side, the central bank came up with the investors and exporters window to some extent improve the liquidity in the FX market. So those policies have had very impressive impact. Or let me not say impressive impact, they've had some impact on the economy. Like you mentioned, the issue of there's been some stability in FX. But you have to juxtapose that policy against an improved flow. Because there's been an improved flow, not just because of the investor exporters window, but because the country has been able to improve production. If you look at the second quarter GDP report, it said that Nigeria's crude production was 1.8 million barrels per day. That was compared to 1.69 million barrels per day in the first quarter. So we've seen some level of improvement. On the other side, following that, we have also seen improvement in crude price. Yeah. We've seen crude trading about $58 now. I mean, throughout the second quarter, the crude traded above $50, $48, $50. So because of improved earnings from foreign exchange, the central bank has improved war chest to provide liquidity. And that has encouraged foreign portfolio investors to say, look, these people now have about $3 billion in foreign reserve. So if I bring my money to this country, the likelihood I can take it out, given that they've also created a window for me to bring the money at market-determined rates. Because those things have to work, you have to look at them in the same context. Improved policy environment, also improved flow from our major export earnings, and therefore improved reserve. Those things boosted investors' confidence, and that made it that window that was created to be more effective.
Indeed. Well, we're going to take now, and we'll be back. We'll still be talking more Nigeria at 57, a look at the economy, and I'll still be having the CEO of Carrier Assets here, giving insight into most of these issues. Stay with us. It's still Business Nigeria. Thank you for staying tuned. I still have the Chief Executive Officer of Cowry Assets, Johnson Chukwu, here in the studio. We've been looking at Nigeria at 57 and issues surrounding the economy. Now, in the process, let's look at the year two, as in 2017. The capital markets, it's been up and down, at times positive, at times on the negative side. And government has been raising bonds too. The DMO has been coming out to raise the Sukuk bonds and all of that for infrastructure development. I don't know if that's a step in the right direction.
Well, any measure that the government takes to improve infrastructure will be a step in the right direction. The critical challenge we have in this country is that we do not have the right infrastructure to support productive economic activities. And if you really want to dimension the problem we have today, you have low foreign exchange earnings because you have only one export product. Okay? So because you have low foreign exchange earnings, you have instability in your FX market. And when the FX flow from that source of earning dries up or comes very low, your economy goes into a recession because the liquidity that all other economic activities has dried up. So the critical challenge we have is we will not have infrastructure to support productive activities. So if the government borrows to build infrastructure, it might be expensive borrowing. Luckily for the Sukuk, it's not even expensive. Because, of course, the effective yield is about 16%. Okay, but having said that, the government needs to go beyond borrowing to build infrastructure. If you look at the 2017 budget, total borrowing is 2.35 trillion, projected borrowing. Capital expenditure is 2.24 trillion, which means the government entire capital expenditure for this year will be borrowed. Whereas if you look at the government's ability to service the debt, we're already looking at about 45% of government revenue going into debt service. So in effect, the government really does not have the headroom to continue to borrow because very soon it will not even be earning enough to pay interest on those loans. And that is why, like I said, in as much as I said, whatever the government does to build infrastructure is acceptable. Yeah. We have to look at what's the optimal source of funding that the country can support, that can support infrastructure development. The current borrowing will not go anywhere to build infrastructure. What is 100 billion Sukuk that was raised? It will not build the Lagos-Ibadan Express Road. Yeah. You understand what I'm saying? So we really need to review the model that we're using for funding infrastructure. And because one, we are already getting to the limit of our ability to service the debt. That's one. Two, we have also crowded out the private sector. If you look at the economic space today, go and look at distribution of credit. Most of the credit that the banks are advancing is going to the public sector, the government. Because one, the government is safer borrower. Yeah. Two, the government ability to, the likelihood of government defaulting is low. And three, the government is borrowing at a very exorbitant rate. 5-year bonds are trading about 16%. 1 year, 364-day instruments is coming at a yield of about, a coupon of about 18.5%, 18.6%. Effective yield is about 21%. So the private sector has to borrow at a risk premium above the government borrowing rate. And you cannot really borrow and engage in in risk sector at 30%. It's not possible. There is no risk sector economic activity that will sustain a 30% interest rate year on year. So you find out that the banks are shying away from lending to the private sector. The private sector cannot even afford to borrow at those rates. And that's what explains the reason why you are seeing increase in non-performing loans from about a threshold of about 5% that the Central Bank has set to about 14% today. Because once you have a high interest rate, the likelihood of default increases. Because most economic activities cannot generate enough profit margin, enough margin to pay that rate of interest. And that's what we call default.
In all of this, you've mentioned something very important, talking about the structure of government and all of that, which I also hold I say as very important. But the document which we all look up to now, beautiful documents, good projections, employment rates, crude oil production, agriculture, manufacturing. That's the economic growth and recovery plan and all of that. I don't know. What do you think about the implementation of this very important document?
I'm happy that you use the word beautiful document. In terms of enunciation of vision, it looks very beautiful. But the question I just asked, what measures have been taken to implement the Economic Recovery and Growth Plan? I'm not aware, beyond the Vice President's executive orders, of any other measure that has been taken by the government since the announcement of that policy.
We're investing so much in agriculture, information technology, and other things. There are lots of investments.
Let's bring it down to basics. You just said we're investing so much in agriculture. What are we investing? Where are we doing irrigation?
Well, the figures we see, like the northern part of the country.
Are we irrigating any major part of the north, or any part of the east or the west? Okay. I'm not aware of any major irrigation contract that will lead to an all-season farming. We are still not doing 2 seasons of rice production. We should be talking of rice production 2 seasons. You can have the paddy rice during the rainy season and the upland rice during the dry season. We're not doing that. What we're doing in the north, we're doing upland rice. In the south, we're doing paddy rice. So there's no reason why you shouldn't have. If you irrigate the north, you do 2 seasons of rice production. If you irrigate the south, you do seasons of rice production. But let's even look at what the figures are telling us. Okay. Second quarter, 2016 GDP performance. Agricultural sector grew by 4.5%. First quarter 2017, it grew by 3.38%. In the second quarter of 2017, it grew by 3.01%. So agricultural sector is growing, but growing at a declining rate. So that is not manifesting. Whatever investment we're making in agriculture is not manifesting, because we're talking of a higher growth in agriculture. Yeah. So in effect, we are seeing an agricultural sector that is actually declining in terms of GDP growth. And that is how economic sectors decline until they go to negative. So if we are really investing in agriculture, I want to see here that specific investments. And I want to see it manifest in the performance of the agriculture sector as it relates to the GDP figures. That is not showing. You just mentioned the information and telecommunication technology. All the investment I knew that has gone to that sector were private sector driven. And they were mostly funded from outside the country. Yeah. Because we cannot afford to borrow from at local rate to fund those infrastructure. But let me tell you, even the danger in that sector. We are seeing failures. Where is Etisalat today? Nine Mobile. Yeah. Because of debt burden and whatever other factors, that operator has almost failed. We've had issues with MTN recently. I don't want to talk about the others that I know that are struggling to raise capital to expand their network or improve their network quality. But the reality is this: we are not seeing government investment. And the government does not even have the wherewithal to invest, because virtually all the revenues of government are going to service overhead expenditure.
There we go again. Who can go on and on. Chief Executive Officer Cowry Assets, thanks for putting some of these issues into perspective, particularly as Nigeria celebrates 57 years of independence, but focus on our economy. Well, we pray that everything works out well, at least for good. At the end of the day, it's still our country, Nigeria.
Absolutely. Yeah.
We have nowhere to run.
Absolutely. And that's why we are worried. That's why we need to keep providing solutions so that we have a better country.
Thank you very much for joining us on the show today.
My pleasure.
Happy Independence again.
Same to you, and happy Independence to fellow Nigerians.
Yes, so, well, happy Independence to Nigerians. That's how we wrap the show today. You'll join us tomorrow, God willing, for another incisive analysis, of course, on issues affecting the Nigerian economy and the business environment. I leave you with the figures of the exchange rate as it stands today. On behalf of the entire production crew, thank you very much for watching.